How are we doing, guys? So in this video, we're going to be going over the income tax process for an OnlyFans creator from start to finish. Now, the purpose of this video is I haven't seen many videos like it on the internet. I've seen bits and pieces of like OnlyFans creators doing this and that, but never the full tax process. So this can be applicable to OnlyFans, Twitch, Patreon, YouTube. Anything content creation wise, it could be applicable to Twitter creators, honestly, any of them. So a little bit about myself. I'm a CPA in California, license number 156166. I have a master's degree in taxation and I work in tax right now. So I'm pretty known and I have some experience in the tax space. So just giving some knowledge, working on my explanation, research ability, giving to you guys. So let's start. I had ChatGPT make some data for us. Let me highlight all this. That could be hypothetical, what a creator would maybe see throughout their day-to-day, or throughout their year in OnlyFans. We'll get to that later. So starting here, first name, we go to John E. Last name, Ping. All this is good. Home address, we'll go 123 Ping Street. No apartment, lives in a house. City, Spoon. State, California. Zip code 12345. Filing single, make sure to mark that. I put a fake birthday here just for the sake of the Excel. You need a birthday. This guy, Glenn Reeves, shout out to him, makes some great Excel sheets. So we have that. Thank you very much to him. Excel1040.com to check. He has some great sheets. Okay, digital assets. No, in this case, make sure if you do, you put yes. And for the sake of the return, I'm assuming it's strictly W-2 income, or not W-2, strictly OnlyFans income, no W-2, no stocks, no bonds, no dividends, no interest. Strictly OnlyFans income. I know it's not exactly realistic, but for the sake of the video, I think it's more beneficial if we do it like that. And then we're doing standard deduction, so there's we're not doing any charitable deductions, no home interest, none of that. And we're filing single, I already said that, and no dependents, so no kids. Okay, so this first whole lines of the ones are pretty irrelevant to us. We don't really need them. So we start with this line 8 right here. So other income, schedule 1. So we go to schedule 1 and then we'll see schedule C, business income or loss. So we'll go to schedule C and here we are. So name, it was John Ping, right? John Ping. Social Security's here. Our business will put entertainment. You don't need to put OnlyFans or Twitch, put entertainment. And then the code. You go to this Schedule C, or 2024 instructions for Schedule C, and at the bottom of it, they have these codes. So in our case, we're considered an independent artist, writer, or performer. So 711510, we go right here, 71510. Business name, no name, same name as us. Employer ID, none of that. And then this, you just put your address you put on here. So it was whatever. Johnny Ping, 123 Ping Street. I'm not going to bore myself with that. Accounting method. We're using the cash accounting method rather than the accrual. Basically, cash is you recognize income when it's received and expenses when they're paid. Simple as that. Accrual is when it's earned, cash is earned, and expenses are incurred, even if the cash hasn't literally changed their hands. Cash is much easier to keep track of, especially if you don't have like a bookkeeping software. If you're new to business, it'd be a lot easier to just have cash. So, okay, I paid it. This is how much I paid. I made this much money, I made this much. So in this situation, we're going cash, we're not going accrual, just for simplicity's sake. But now as your business matures, you learn a little bit more about taxes and accounting, maybe you think accrual makes more sense. Talk to your advisor or CPA. Okay. Did you materially participate in the business? Yes. I'm going to assume it started this year. We'll go yes in 2024. Did you make any payments that require you to file forms 1099? So what is 1099? 1099 NEC is for when you pay somebody that's not in your not part of your company for business services. So say you paid an accountant, you paid a lawyer for legal advice, you paid a photographer to take photos, and I didn't know this until later, or I researched it. It only requires that you paid it in cash or check. If you used a credit card, then the credit card companies file it for you. Apparently, I didn't know that to be true, but I guess that's the case. So if you pay them in cash or check, then you need to give them a 1099. If it's the credit card, I suppose you don't. If yes, will you require the forms? Yeah, I'll file them. I'm not going to file in this video, but hypothetically, I will file them. Okay, so now I'm going to make this side by side with the expenses, and we'll go over here. Gross income, receipts, or gross sales. So this is our subscriptions, our tips, our pay-per-view content, custom content, and partnerships. So that'll be 113,000. That's what that means. All the money you made from your business, solely from the business. That's the gross receipts or sales. Expenses. Now we'll go down here and look at our expenses. First box, line 8 right here. Advertising. $3,500 in Instagram, TikTok ads, or collaborations. Fully deductible for the sake of your business. I'll make this green so we know we used it. Commissions and fees. OnlyFans takes about 20%. They take exactly 20% of all the money you make on your OnlyFans. So 20% of this 113,000 would be 22,600. So now we get into another topic of discussion, depreciation. So you see right here, line 13 or box 13 says depreciation in section 179 expenses. So the way the IRS treats this is if you have something used in your business, so say a camera, say some lighting, say some other stuff, sound equipment, and it's gonna last you more than a year, you need to depreciate it. Now there's ways to depreciate. We'll go to this sheet right here, 4562, which is about depreciation and amortization. So the way it works is there's this one area of depreciation called 179. In this case, you can depreciate it all within 1 year. Now, when would you want to do that? It depends on type of business. Say you're having a really good year and you're making a lot of money, you're gonna have a lot of taxes to pay. Then it could make more sense, let me just maximize my deductions, my depreciation now. If I pay less tax this year, then in the future I'll have lower taxes. I don't need to take so many deductions. That would be a time. It really depends on the business itself. It's hard to just give flat advice for anything. But that's a typical situation you'd see. For the sake of this video, I'm going to assume we're doing the regular depreciation, just general depreciation system, straight line depreciation. So as you can see on my sheet, I'm assuming we had $10,000 total. The camera was $6,000, the lighting was $4,000. So here you see it, camera 6, lighting 4. And that's a total of $10,000 for depreciation. The way it works is you look here, which property class. You can't just pick, oh, it's going to last this many years. There's a way to actually base it off of. The IRS lays it out. And in our case, it would fall under, doesn't really have a class life and hasn't been designated by law. So we're just going to go with 7 years. You see like here, 5 years for office machinery. If you have a tractor for over-the-road use, it'd be 3 years. Things like that. Remember guys, Google's your friend. Look these things up. Obviously, it's a little, get professional help when you need it, but a lot of things can be Googled, ChatGPT. These things are very effective. So 7 years in our case. We put that here, 7 years. Now the convention, this HY is half year convention. Well, why do we use half year? Well, it means basically, even if you place it on the first day of the year, January 1st, it's assumed to be placed in the middle of the year, whatever it is, July 1st. Why is that? Well, it's just the law. Code of Federal Regulations, I said that wrong. Half year convention applies to depreciable property other than real property placed in service during a taxable year unless the mid-quarter convention applies. In this case, that does not apply. I'm just telling you that as a fact. That's for end of the year stuff. So in this case, it's consumed to be placed in the middle of the year. Close that. And the method we're using straight line, that is basically just the amount of years it has total and 1 over 7. That's it. 1 over 7 this year. Second year, 1 over 7 again. 1 over 7, 1 over 7 for 7 years straight. You can see here, 7 years. But since it's considered placed in the middle of the year, we got to go half. So 1 over 7 is about 14%. So you deduct 14% of the total cost. But since we're in the middle of the year, it'd be half of that. So it'd be 7%. But the next year it'd be 14%, then 14, then 14. You just keep doing that until it's fully depreciated. So you can see here, you get that $6,000, which is the cost of the asset, times that 7%. We get a deduction of $428. And then this is for the 4,000, you get 285. We get the sum of those things, and we get a total of, I believe it's about 714. Yeah, 714 and some change. I just rounded it up. And then we go back to our Schedule C, and we can place that 714 right here. Beautiful. Now let's keep going. And also, here's the little calculator if you want to see it. This stuff is very good. It'll help you visualize it. It makes it very easy to calculate. You don't need Excel. You can see $10,000, 7 years, half year convention, 714. Then you can see throughout the years how much it depreciate, and we eventually get to 10,000. That's that. Let's keep going. Put this in green. Okay, now we keep going. We see these two. These would fall under supplies. So $4,500 supplies not included in part 3. Now the way the IRS sees this is, you assume makeup and beauty products. It has to be, it's worth noting, it has to be fully for the business. It can't be used outside of your business. But if it's fully for the business, say you get like a cheetah print hat, where are you going to wear that? Maybe somewhere else. But assuming it's for the video, fully depreciated within the year, fully expensed within the year, deduct all of it. Keep going. Content production software. Now this is hard to figure out where it places. So you go over here, you go 27, which is just down here. Other expenses, you can put whatever. I know Photoshop isn't that expensive, but for the sake of the video, let's say $800, and then that flows all the way back up here. You can see that. Keeping it going, professional services of $2,000. That goes on box 17, fully expensable, fully deductible, like photography, CPA fees, legal advice. And then travel, fully deductible. I'll show you where it says that in the law. Minimize this. Right here, deductible travel expenses while away from home include but are not limited to the cost of travel by airplane, fares for taxis, shipping, lodging, dry cleaning, business calls, tips, a lot of these things, ordinary necessary expenses. Now, it's got to be away from your tax home. Your tax home is where you do your main place of work. So say you live in Florida, no income tax there, but you got to travel to Los Angeles for a photo shoot and for work. That's fully deductible, assuming you're not like living there for fun or doing vacation. Assuming you're strictly there for work and you have a business purpose to be there. Like you got to go shoot some content at someone's house, you got to do whatever you got to do. Fully deductible, and then you go back home as soon as you can. You're not just lollygagging over there. Okay. That's pretty much it for Schedule C. And you can see we get a total expense of $35914. Subtract that from our total gross income, and we get our net profit for our business. Okay, sorry for the pause, we're back. So, starting with Schedule SE for self-employment tax, we have this number right here of 77086. This comes from Schedule C, then we just calculated the net profit from our business. So, we multiply this number by 92.35%. Now, why do we do that? So, to put it simply, say you're an employee, when you're paying your tax on your total wages, you're only paying your fair share of the FICA. Now that you're a business owner, we need to adjust for that. So you look at this graph here, or this graphic, you see we're paying the 7.65 right here. The employer pays their 7.65 here. It wouldn't be fair for us to pay both sides of that. So what the IRS does is they let you multiply this by 92.35, which reduces, you're getting taxed twice on it. So you're only paying your share. So of that 77, we're only paying self-employment tax on 71,189 of that. Now, this 168 is the upper limit for Social Security tax. We made less than that, so it doesn't really apply to us, so we just keep going on this. And we can see that this right here, we're paying 12.4%, which is the 6.2 and the 6.2. Then now we're paying the employer and the employee portion of that. Stay with me here. I know it sounds unfair. Stay with me. On our 7.1, we're also paying that wrong graphic. We're paying that 1.45 and 1.45, which is 2.9% on that same number, which gives us $10,891 of self-employment tax. But we get a deduction for half of that, of 5,446, and we subtract that. We go to our Schedule 1. We'll see it right here. That goes to 1040 line 10 right here, and you see we get a deduction for that, which brings us to 71640. We have the standard deduction, which is right here. It's just what it does for 2024 of 14,600. And we also have right here qualified business income deduction. Let's go to this calculation over here. This basically takes your qualified business income, which is just the amount of money you made minus your expenses from the business. So right here, that's that 77086 from Schedule C. It goes here, trade, business, entertainment. I'm leaving this blank for now. I'm not gonna fill it in. And you multiply this number by 20%. So 15,000 would be our maximum deduction, but you also have to multiply this 57040, which comes from just our adjusted gross income minus our standard deduction. That gives us this 57040. We can't get a deduction in excess of 20% of that, so that actually caps our deduction at 11,408. So you see we have that right here, 11,408. You add line 12 and 13 together. That's our total deductions, and then we subtract those out. 14 from 11, which leads us to $45,632 of taxable income. Sorry for that final pause, but let's wrap up the video now. So we had our taxable income of $45,632, and now we have a tax of $5,243. This isn't self-employment tax, it's just income tax now. Now, how do we get to this number? So we'll go to our calculation. I made it pretty simple here. Here are the rates for the year for single filers. Our taxable income was $45,632. Now, if you look at this graphic, we're paying a base amount of $1,160 plus 12% of the excess over $11,600. We're just under that 22% rate. So we're paying $1,160 plus 12% times $34,032. Here's the math for that. You can see the base amount, J7, $1,160 plus our amount above 12% times the 12% rate, 5,244. And just to check with this number, it's about the same thing, off by $1. That for income tax, and then we have self-employment tax of $10,891. You add those together, it's our total tax of $16,134. You scroll down, you see that's exactly how much we owe. Guys, it's that simple. I know in reality it's really not as easy as that. It's obviously there's data collection issues, there's some expenses that you don't know where to classify, you don't know if they're personal or business use. But if you can see the logic behind it, I think that's what matters. You just got to be able to research online. ChatGPT, I hate to say it, it's a great tool. Google's a good tool. Reddit's a good tool. Just get insight. Obviously, get professional help if you need it. I feel like once you get it scheduled, it's kind of hard to do it on your own. I've been doing it for years, so it's a little easier for me to research things. Even I'm having trouble with some of these things. It's hard on the fly. You know what I mean? It's easier when you're in your own space. You have time to research things. It's a lot easier. But if you guys want more help, comment down below. If you have any other videos you want me to do, comment below. I'm always here to help. Love helping. Love tax. All right, guys. Thank you.